and I say, what do you need help with? What can I do? How can I invest my time to help you find resources? And that's exactly what we do. So that's why we've always had a great collaboration with SeedSpot and everything that they've done for the community. So we're here to support and help you guys. What I'm going to talk today about is we have a great presentation called The Power of Capital. What is money? What type of access? What type of lending are available for you? But a little housekeeping before we start. Guys, this is your time. This is yours. I am here for you. So if there are any questions, please come off mute and ask them. I don't mind stopping to the presentation. My feelings don't get hurt that way. My feelings get hurt if you guys leave here with questions and that haven't been answered. That's what we're here to provide you. So if you don't feel like speaking, there's also a chat box. I will try to take a look at it every now and then. But like I said, please make this your time and ask questions as we go through this. All
And
right.
just in case he misses any questions, I'm here to help monitor the chat, guys. So don't worry, I'll point it out, ping him. We got it.
Thank you so much. I appreciate it. All right, so let's get started, right? The power of capital. So what is power of capital, right? As we look into your business, whether you're starting, entrepreneur or whether you've already been up and running, you really want to find out like why are we here? Why do we have to know about capital? Because we truly believe that every business deserves to prove themselves in the marketplace. That's a true thing that we look at. And when that looks at in the world that we live in, you have to understand where capital is at, how to plan for it, everything that has been done for hundreds of years, but now we're just going to apply it to the world that we live in today because fundamentals do matter. So I want everybody just to kind of think about this. How confident do you feel about your knowledge of credit options? If you're, like I said, no matter where you're at in the business, find out, think about it to yourself. How knowledgeable are you if I was to take a look at you and say, what type of credits exist? All right. So today we have 6 parts that we're going to cover for some reason. Gabriella, thank you so much for being honest. She's 1. Perfect. I think you need a lot of help and a lot of resource out of this. And even if you're a 4 or 5, this will be a good one to kind of think about your business. I'm gonna ask everybody though on the call, if you don't mind, put in the chat how long you've been in business and if you need capital. And it's a yes or no capital and how long you've been in business. Because I want to make sure I tailor this to everybody so everybody has an idea of what they're looking for. Thank you so much, Lisa. She's a 3. Okay. Lisa can probably get a job here at JP Morgan Chase. But what we're going to talk about is thinking strategically about cash flow. Because every lender is going to take a look at different things, but most traditional lenders look at cash flow. They become what we call cash flow lenders. Does your business need to borrow? Right? Are you ready to get money? And then this third part is we're going to talk about why are you a good investment? And we'll kind of go over how that plays, you yourself and the ownership leadership, how that looks to lenders, what financial information is important. Obviously, we need returns, we need all that fun documentation. And then my favorite part, which is the best part of the meal, it's going to be what credit options exist. And we're going to go over traditional banking, and then we're also going to go over additional capital, other financial institutions, other access to capital resources. And then obviously, let's build your own empire. All right. So we have Omar at the startup page. Welcome, Omar. Charity's at 8 months. And yes, she's planning to launch Sonia's startup. Perfect. Tiffany's been around. She's been in business for a while. Thank you so much, Tiffany. 7 years. And yes, startup 6 months. Yes. Not up and running, but yes. Carrie has been in 10 years and she's revamping, which I love that word, by the way. Free Rev startup. That's a good one, Paul. 1 year and so. Thank you everybody for putting in there. If I missed you, I apologize. But one of the things that I want to talk about this is every single one of you, from startups to I think it was Lisa, I think she or Tiffany, excuse me. 7 years in business. Every one of you has access to capital. We're going to take a look at that and what it looks like. So let's think strategically about cash flow. So cash flow, like it says on the slide, it's more than money in the bank. Lenders want to know, borrowers or lenders want to know that you know where your money's coming and going. Okay. So you really have to think about all these things that you need the money for. Okay. So obviously paying suppliers. We've seen this many times with the line of credit. When you pay a supplier, there's some suppliers that will give you better terms if you buy in bulk. How many of us have heard of Costco? Right? Costco gives you a better price per item if you buy in bulk. As a business, whatever your service or whatever product you make, that's a way that you can use the cash flow. But we want to see, how much money are you actually paying and how fast are you getting it back. One of the biggest liabilities that we see on a balance sheet is your payroll, right? Paying employees. I used to do a lot of medical financing in my 20 plus years of banking. And with the medical financing, once you hire a doctor, by the time they see a patient and then the insurance pay them out, that's typically about 30 to 60 days, if not even more. So the line of credit would be a great use for that. If you're looking to rent the space, how much are you paying? How much can you afford it? And if you can, if you're looking to buy this place, lenders will take a look at the rent space and kind of calculate that. Can you buy your own building? And obviously reinvesting back into your business. These are all the things that we look at for your cash flow. But you really have to understand as a business owner your cash flow because you have to convey it to your lender saying, hey, lender, here's my business, here's how I'm moving, and this is what makes sense. So you guys know your business better than ours. So you really need to pay attention to cash flow. It needs to be managed. Having that efficient payables and receivables can actually really help you with the revenues. I can't tell you how many times I've done lending and I see, 70 days, 100 days out of people with their account receivables. And at that point, I pretty much tell them, like, hey, man, that money's not coming back. You gave somebody money and they're not paying you back, or they're not, no, you got that invoice, you might as well just kill it because it's not coming back. So making sure you have those and then borrowing strategically is one of the biggest parts that can help you out for your cash flow on that part. All right. So just make sure you guys have that right there going forward. So as we get going, we really want to think about, does your business need to borrow? Okay. Because remember, one of the biggest things that I've always see is people will come to me and say, hey, Jose, I need to borrow money. Great. How much do you need? It's like, I need a line of credit for 100,000. I promise you guys, I don't know why, but 90% of when I ask that question, how much they need, 100,000 line of credit is by far the number one answer on Family Feud. Don't know why, but everybody always says that. But remember that you need capital, you got to pay it back. You got to be strategic about it. Okay. You can't just take money out and then say, okay, cool, I'm going to wing it and find out when I pay it back. Because when you look at that as a lender, there's things I want to know. Okay. How long have you been in business? Well, one of the reasons why that's important is because not every financial institution, not every lender has the same menu on their product. Okay. And that's the first thing I want everybody to focus on. Find the bank for your industry. Not every bank is the best at that industry, right? That's the first thing. Ask your competitor, ask friends. We can meet individually afterwards. I'll be happy to guide you guys, but make sure you know the right institution. So, and the reason why lenders want to know how long you've been in business is because if you've been in business typically less than 2 tax return years, right? Not calendar years. We want to see 2 years of tax returns because a lot of them say, hey, I don't have an appetite for that. It's a really risky business. I haven't seen the historical behind it. I haven't seen trends. So they typically tend to shy away from that. And what we see is business owners, and no fault to theirs whatsoever, they just don't know. They'll walk into a bank and say, hey, I've been in business for a year. Can I get a loan? They get declined automatically. Well, the reason they get declined is because you're at the wrong place shopping. But there are other programs, other financial institutions that actually work with startups, even on projections. So a lot of you that are in the entrepreneur or startup stage, don't worry, there's still resources out there for you, and we'll cover that do part 5. Is your business profitable and is your business seasonal? We want to know if your business is making money. Okay, as you guys get going, keep track of your sales month after month. And if you've been in business for more than a year, go back to the previous year to see where you're at and say, hey, am I making money or am I just doing this for fun? Right? And if you're seasonal, if you're in Arizona, for instance, obviously we know that when the summer months come, everybody leaves us. So how does that affect your business? Are you looking to expand? One of the reasons we asked, are you looking to expand? Is because if you're looking to acquire a new business, we can then take the money that's generated from that new business and apply it to this loan and saying once they acquire this business, their revenues are going to go up by X amount. Right. So knowing what you really want to do, having that strategic plan is really, really going to help you. And obviously, will new equipment help your business? I have one company that I work with. They do the non-emergency travel. So they'll pick like elderly people or people who can't, travel other than an ambulance, and they'll take them to the hospital. Well, that's one client that I looked at and said, hey, if you buy another one, that's going to increase your revenue. And that's where lenders want to see, because at the end of the day, once you access credit, they want to see that you have a plan for it. So I know I've said credit a lot, but I want everybody to understand when we go through this presentation, credit has a lot of different meanings, but when we typically use credit in this presentation, it just means an agreement between a borrower and a lender. That's all it is. So you're accessing credit, right? Not the personal credit, which we'll talk about that one in a second. After this presentation, or I'm not sure if they've already been sent out, we have these digital workbooks. And on page 6, it's a really good exercise that I would challenge to everybody. And if we don't have these workbooks, we'll make sure to get these out to you. But it's a great one that tells you, how has your environment changed? What are you looking forward to? What is your plan going forward? And what are you going to do that your competition is doing and changing? And find out, what are my plans for going forward with my business to get the access of capital? I'll pause right there for a quick second. Is anybody, and please feel free to come off mute. Has anybody ever had a conversation or even started to plan out to get capital and would like to share? No.
Hey Jose, I'll share.
Oh, thanks,
I
Paul.
have applied to some accelerator programs and a few grants at this point, and that's kind of where I'm at the moment.
Oh, perfect. Good, good. Now, do you have a plan of what you need and how much you need, Paul? You don't have to disclose it, but do you have a plan of what you need and how much you need and where it's going to be used?
Yes, sir. I have financial. Yeah, I have it allocated out. Yes, sir.
I love that. I love hearing that. Thank you so much, Paul. And thank you for
Mhm.
sharing because that's one of the biggest ones is lenders will ask you, hey, do you know what you're going to do with this money? Right? You want to make sure you allocate because there's been times and times I've seen, and unfortunately, we saw it a lot through the COVID and the pandemic. People didn't plan accordingly, and then all of a sudden, too much debt kind of caught up to them. But thank you so much for that, Paul. So, why are you in good investment? Now we're going to talk about you as the business owner because, like it says, you are the most important part of your business. Yes, when you get a business loan, it's under your business name, all that fun stuff, right? But as a lender, as a borrower, you have to understand you're the most important piece. And typically, when you're a startup, I know we have quite a few startups on here. You got to think to yourselves, hey guys, you're everything. You're HR, you're employee of the month every month. You are the owner. Your holiday party, nobody shows up to it because it's only you, right? You really have to think about that as a business. So as a lender, you got to build that confidence with me to say, hey, I'm going to keep this running. I'm going to get this going. So as a lender, what do we look for? We look for leadership. Okay, we want to know that you're the right person to lead the business. Do you know the industry? Right? I've seen like myself. I've been in banking for pretty much my whole life, and then if all of a sudden, and keep in mind, guys, personally, I can't cook. I'm great at DoorDash, Uber Eats. That's where I shine. You guys be surprised how fast I can order something, but I can't cook. But if I was to come to you and say, "Hey, Paul, you're a lender. Let me borrow, let me borrow money to start a restaurant," right? It's like, well, how? You don't even know how to even put on gloves. Like, how are you going to manage a restaurant? So that's what we want to see. We want to see that you have a plan, even if you're not in that industry or don't have experience. You have a team and you have everybody around you. That leadership component. We talked about cash flow already. You know where your money is coming. If I ask you what your revenues last year compared to this year, or how much money do you have coming in next year, what type of contracts do you have available? Knowing the cash flow, the health of your business, I like to call it the health of your business, will really make lenders feel a lot more comfortable in saying, hey, Gabriella really knows her stuff. She really knows her business. She knows where the money's coming. It's gonna make it a lot easier for me to for me to feel comfortable going into my underwriter and saying we should extend credit because X, Y, and Z. And then obviously we want to look at collateral. Is there a collateral for your business? Some of the programs that we're going to talk about require maybe a lien on your personal home. They require maybe, do you have a lien on all your business assets? Looking at that collateral make a lot of business owners feel or a lot of lenders feel a lot more and more confident. All right. So now we're going to talk about one of my favorite topics, personal credit or business credit. Okay. Which one's more important? If you guys can just add it in the chat real quick, which one do you think lenders care more about? Your personal credit score or your business credit score? Then I'll give it a quick second. If you guys can just put business or personal. Or if you can come off mute and speak about it. Okay, a lot of personal in there. All right, Freddie throwing it out there. Sonia's there. Hi, Sonia. All right, personal. Startups, probably personal. Perfect. All right. So I love it. Thank you, guys. So everybody who said personal, which I think is everybody, right? You are 100% correct. Oh, no. Sorry, Carrie. You're 100% correct. You still get a gold star here. I'll give you a gold star. Um, the reason why I think you guys really have to think about this is because whenever you're extending credit, like I mentioned, you're the most important part. Who makes your loan payment? You do. Who determines how much money you take out of your business to transfer to your personal? You do, right? The same habits that exist with you personally are going to transfer to your business. The only difference is instead of your social, it's under your EIN. So when a lender comes up to you guys, the FICO score is a huge reflection of what you should look at. Now, obviously, it's between 300 and 850. But take a look at your personal credit score. Take a look if you have any outstanding, maybe things that you paid off that are still reflecting that should be taken up. Take a look at your personal credit score because that is the most important part, right? No, no worries, Carrie. My apologies. But that's one of the things that we really want to think about is say, hey, your personal credit score is the most important. And I'll tell you this, when it comes to your business credit score, obviously they're done in Bradstreet. Okay. Do lenders look at it? Yeah, they look at it. But I can tell you this, I have never declined a loan because of their business credit score. But I have a lot on the personal credit score. Okay. So even if you have, if you have an immaculate credit score, that's fantastic. Let's work on keeping it that way. But if you don't, there are other lenders because every lender is different. Remember, not every bank, not every financial institution has the same menu items, right? So there are some that say, hey, I need at least 700. And there's some that says, hey, we'll work with not so perfect credit, maybe in the 600s, right? So let's take a look at that. If you don't know your personal credit score, I highly, highly suggest. Now, I got this question asked to me earlier today, and I loved it. What if you have a partner? What if you have a business partner? Okay, do they take one or both? They'll actually look at both. So whenever you get a loan out, for instance, does anybody here have a business credit card? If anybody has a business credit card, what do they do when you apply for a business credit? They check your personal credit because once again, who's going to make the payments? So you check your personal credit of the owner, and then that credit card will be put under the business EIN number. So if you pull up your personal credit report, that business credit card will not reflect on it. But that inquiry will, because they just check it to make sure. It's the same thing with loans. They don't put business loans on your personal credit, but they do check your personal credit to make sure you are credit worthiness. All right, just make sure we keep that in mind. And then I get the question, what about business credit? Jose, I
Can
want
you
to
say
build my
that
business.
again?
Oh, please go ahead.
Sorry, can you say that again? Inquiry will reflect on the personal, but not the actual credit card.
Hmm. So anything under the great question, Gabrielle. Gabriella. Anything under the business name, so any credit under the business will only reflect on the business credit report. But they check your personal credit to make sure your credit worthiness for the business. But then like that credit card for the business isn't going to reflect if you miss a payment on it, it's not going to reflect on your personal credit score. Yep. Just give you a heads up on that one. So I get this question all the time. Jose, I want to build business credit. What is business credit? Well, business credit is done through Duns and Bradstreet, and one of the things about them is it's a self-reporting agency. Like I said, some banks look at it, some banks report on it, some banks don't. What I would say is, and I know I already said this, I'll say it again. Take a look at your personal credit. That will get you declined or that will get you not approved rather than your business credit score. So especially for a lot of the people here, the startups, even if you're not up and running, but especially startups that have no financial information, can't show if you've done many sales, your personal credit score is going to be imperative when it comes to your getting access to capital. I hope I answered all of your questions for everybody there. I'll take a quick pause here. Does anybody have any questions on that part? All right, you guys are wonderful, by the way. Thank you so much. All right, so now we're going to get to what financial information is important. Okay, so now we're going to lenders and we're saying, hey, Jose, I'm looking to get a loan. I've fixed my personal credit score. It looks awesome. I'm ready to keep it going, right? So now what type of financials are you guys going to look at when you go to a lender? So we can go to a lender. Once again, I know I'm kind of repeating myself. Loan officers want to feel comfortable extending credit to you because the number one thing banks do not want is we don't want to own your business. We don't want to do your service. We don't want any of that stuff. What banks want to do is they want to partner with you. Loan offers want to partner with you and say, let me extend credit for you to grow and scale your business. And obviously, we're going to get a little cut of interest, right? That's just part of doing business. So keep in mind that you really want to make sure you have all your financial information correct. Now, as a banker, I can't tell you how many times people have came up to me and said, "Hey, Jose, I did $1 million in sales last year." And unfortunately, we can't trust words anymore, right? We can't take people's words on it. So the things that we're going to look at is we're going to look at tax returns. For your startup people, obviously you don't have business tax returns, but they will ask you for your personal tax returns because they want to see what are you growing, what are you doing, and what does your personal home life look like. For instance, one of the things that we used to calculate for getting a business loan is your personal. We want to see how many dependents you have because those dependents, they require food, they require clothing, they require shelter, right? So if you have, 2 or 3 kids or whatever it is, if you have, a wonderful family, we take that into account because at the end of the day, we have to make sure that you have enough money in the business generating money that you're paying yourself off personally. And for those businesses that have been up and running, most banks will require 2 years of business tax returns, sometimes 3, but mostly it's 2. Okay, so when you say you've been in business for 2 years, I always say, have you been in business for 2 calendar years or do you have 2 years of tax returns? Okay, make sure you keep that in mind. So most lenders require 2 to 3 years of business tax return alongside of your personal. So what does this mean? This means make sure you guys are doing your taxes correctly. Make sure you're doing them on time. And if you do have back taxes, that's something to take a look at because lenders will take a look at that. For those up and running, obviously balance sheets is something that is huge for us. We can see what type of liabilities, what type of assets, what type of equity you have in your business. So for those that are up and running, I will say those startups, and even if you're already up and running as a business, kind of like Tiffany is, she's been around for 7 years. Take a look at those sheets and make sure you guys have access to them. If you have QuickBooks, QuickBooks is a great generator. Sometimes I feel like I work for QuickBooks rather than Chase. But guys, if you don't have QuickBooks, there's a lot of great resources out there, and I bet you SeedSpot has some great stuff that they can help you guys with. If not, reach out to me. There's a couple organizations that even do training on it. Do you guys offer QuickBooks assistance?
I believe as part of yeah, we do have resources or people we can connect you with, but don't quote me on that. I will double check then get back to you all.
I appreciate you. Thank you so much. So guys, if you don't have QuickBooks, if you're up and running, it's so much cheaper for you to buy it one time and then do the work yourself. I'll tell you guys a great one for QuickBooks. All right. If you have a business bank account, and depending on the bank, ask your bank, but most banks do this. You can actually go into your online banking, have it meet your QuickBooks, and then once they meet, they talk to each other. So all the transactions from your bank account, you go into QuickBooks and you hit retrieve, and it pulls them all out of your bank into your QuickBooks. So you don't have to go in there and manually enter them every single times. Okay, talk to your banks. They should have this feature for you. It's going to help you out so much, and now you don't have to pay a CPA to enter all your transactions because that costs money, or a bookkeeper. But make sure you have these financial information. Your balance sheets are very crucial. Profit and loss statement. I love profit and loss statements, especially for startups, because this is going to tell you where your money's going. Okay. A lot of people will tell me, Jose, I'm making $200,000. But then when I look at their profit and loss statement, it's like, great, why are you spending? I'll give you guys an example, actually, now I think about it. There's a marketing company that I was working with, marketing, right? They did website design, they did some, SEOs, all this fun stuff. Their physical travel, they made 150,000. Their physical travel accounted for $60,000. I'm like, how are you spending $60,000 if you're an online marketing company? And it's because they were going to all these conferences and all this stuff. I'll never tell people how to spend their money, but I think about this, and we looked at his profit and loss statement. I'll say, well, here's where most of your money is going to. What is your return on investment on these travels? So that's why I'm saying have a profit and loss statement readily available to you guys, and make sure you review it. Sonia's used QuickBooks and she's not a fan. How can we check what our business credit is? You can, Sandra, real quick. Great question though. You can go to Sandra asks, how can I check what our business credit score is? You can go to Duns and Bradstreet, and you can actually go in there and find out. I think you need your EIN number and all that fun stuff. But you can definitely check it if you've been up and running. Like I said, it's good to know, but I've never declined somebody based on that number. It's the personal credit that I definitely recommend. But take a look at your profit and loss statement, guys. If you're working with a CPA or bookkeeper, you're not reviewing these, I like to say monthly, but at least quarterly. You're doing yourself a disservice, because if you come to me as a borrower and you can't tell me how you did last quarter compared to this quarter and so forth and so on, then guys, you don't know the health of your business. The way I describe it is this, and I hope this hits home to everybody. How many of us have gone to a doctor out of an emergency? Right? It's the worst thing ever. So if you go to a doctor and the doctor said, "Okay, what's your normal blood pressure? What's your normal, what else is out there? Your cholesterol. What's your normal all this?" And you're making the same faces that everybody's like, "I don't know." How can that doctor help you? He has to go back and reevaluate everything. But if you go to a doctor regularly and say, "Hey, I'm healthy, I feel fine, but I'm still going to get checked out." They check all your vitals, right? So now you have a baseline of where you're at. All these financial information that I keep speaking about, it's your health of your business. And if you don't know how healthy your business was back in 2024, how are we going to predict what your business is going to do in 2025? If you don't know what your blood pressure was in 2024, do you need blood pressure medication? I don't know. It's the same concept. All right. Any questions on what other financial documentation might be asked from a lender? All right. Let's keep it going. All right. Here's my favorite part. What credit options are available? So, like I said, and thank you so much for everybody who put their if how long they've been in business, and then obviously if you need credit. This is going to be the fun one. Okay, we're going to talk about what type of loans are available out there to access capital, right? We talked about a credit card already, which is the first one. This is probably the easiest one to get an access to a credit card. Obviously, why I love it is because it's easy cash flow. You can spend it very convenient. Obviously, there's control, there's service and security, and then obviously, who doesn't love rewards, right? But utilizing a credit card, getting a credit card more than just getting a credit card. It's about utilizing it. Okay. One of the biggest ones that I'm a believer is get a credit card and pay it off every month. I am OCD, and I pay it off my personal credit card, I pay it off every week. I just don't like seeing big numbers. But it's okay. It doesn't affect your credit. It doesn't do anything. Pay off your credit cards, and then you don't have to worry about the interest. The other thing that I love about credit cards is has anybody ever had fraud on their debit card? Okay. How long, Gabriella, just because I saw you shake your head, ma'am, how long did it take for you to get your money back?
Sometimes it's taken like 2 weeks. I mean, it wasn't something terribly long. It was not a small thing. And then sometimes it's been like right away if I caught it, like before anything happened. But it's a pain.
Mhm. Yep. So there, she said the first part I'm gonna harp on. 2 weeks. Typically, most financial institutions, when a debit card is used and there's fraud on it, it does take about 7 to 10 business days. Why? It's because debit cards are processed through an ACH file system. Okay, it's a completely separate system, very antiquated, but it's a completely different system than credit cards. And the reason why I say this is a lot of people, especially if you're, maybe credit cards almost instantly. That is correct, Tiffany. If you're working on your credit card, if you're on your debit card, and let's say you get a $10,000 fraud, but you have a deal coming up, an opportunity where you need $10,000, and you don't have it because it's out of your account, and you have to wait 7 to 10 days, and you're at your bank like, I need the money now, or you have payroll coming up. We've seen this, and it is very, very terrible, and there's nothing that banks can do. But on a credit card, guess what? It's not your money, guys. Who cares? What do? They close out the credit card, in 2 days you have another one in your mailbox. That's a way to prevent yourself from having the cash readily available. I can't stress it much. If you're using a debit card for your business expenses, please go talk to your local financial institution, go talk to your bank, and find one that fits your needs and what you have. A lot of banks right now have like 0% for 12 months. Talk about rewards, talk about everything that matters to you. And there's many, many options out there, but please, try not to use a debit card. Business lines of credits. Like I said, this is probably next to a credit card is probably the most popular product we see. Okay, so business lines of credit. Like it says on the slide, it doesn't have a fixed payment, but it does expire and it needs to be renewed. Most lines of credits do have a 12-month, we call it short-term working capital. They have a 12-month active period. So for 12 months, you're able to use the line, pay it off, use the line, pay it off. And after 12 months, the bank will review it with you and say, okay, number one, are you using the line of credit correctly? You're not just living on it, you're actually using it and pay it back. And number two, is it enough or is it too much? And then you'll have to renew it. When it comes to a line of credit, I would recommend that everybody get the line of credit before you need it. Okay? Think of the line of credit as a like what's those things? Life what's those things? The lifesavers. There you go, the lifesavers. Think of it as a lifesaver, right? Have it on the boat before you get on the boat. Right? Don't ask for a lifesaver when you're already sinking. Okay? It's the same thing with the line of credit. Get a line of credit before you need it, guys. Because once you're sinking, it's really hard for banks to approve businesses that are going downhill to get a line of credit because the way they see it is if you're losing income, you're not generating revenue, what are you going to do if I give you another debt for you to have to pay back? So think about that. If you don't need a line of credit, Gabriella, go ahead, man. Gabriella.
I didn't really know what business line of credit was an option. Is that something that a startup would want to consider, or not until you've been in business for a while?
Definitely if you've been in business for a while, yes. Startups, there's some financial institutions, we'll go over a couple here, here in a little bit, that will actually give you a line of credit for startups. SBA has one, 7A, we can talk about that one here in a second. But typically they're a little bit harder to obtain for startups. Once again, they check your personal credit score because there's no collateral. A line of credit is just like a glorified credit card. They can't come take your house, they can't take your car, just based off your personal credit. And then the larger they are, sometimes they base it on revenue and accounts receivable. But they're a great product to have. And obviously, how do you use them? You use them for like on time. You use them for like if you're buying material. If you make any raw product or any product and you need to buy the raw material, a lot of vendors will give you a discount if you buy in bulk. Remember the Costco, right? A lot of them will give you so use line of credit and say, great, I know I need $100,000 worth of wood to make my product, but I know I can sell it in 60 days. So I'm only going to pay interest for 60 days. Plus, my vendor is going to give me a 10% discount if I buy in bulk. That's how line of credit should be used. Hiring people should be another one, right? That's how line of credit should be used. And once again, if you're in a lot of banks will actually ask you to rest the line of credit. Okay. So that means that within the 12 months, they want to see that line of credit not be touched and sit at 30 consecutive days at a zero balance. Does anybody want to guess why they require that? For 5 points, that means absolutely nothing at the end of the show. All right. Nobody wants the 5 points. The reason why creditors require that is because they want to see that you're not living on the line of credit, that you're utilizing it and you're not relying on it. And if you have it sit at a zero for 30 consecutive days, that means you can run your business without needing it for 30 consecutive days. And that's what banks want to see, that you're utilizing the product correctly. All right. Any other questions on that line of credit? Oh, there it is, Lisa. I apologize, Lisa. I didn't see your response. Lisa, you get a thumbs up. Yes, Lisa said it on the chat correctly. To know your business can survive without it. That's exactly what it is. Thank you so much, Lisa. All right. So now we're going to move on. If there's anybody, there you go. If there's any questions on lines of credits, we'll move on to our term loans. So the term loans that we're talking about, these are your traditional loans, fixed payments, fixed terms, all that fun stuff, right? But what can you use with these? For these guys, obviously, there's going to be a little bit more of a rigorous process when it comes to getting these. So for instance, if you're looking to buy equipment, if you're looking to buy out your competitor, if you're looking to buy, let a partner come in, partner buy in or partner buyout, right? If you're breaking up with your business partner, you need money for him to pay him away. Guess what? Business term loans are there. For real estate, for capital, for expansion. These are the great loans, and most of them have fixed rates. If you're looking to get a piece of equipment rather than putting it on a line of credit, because remember, line of credit is a short-term working product, you say, you know what, Jose, I'm going to get this piece of equipment and it's going to be $100,000. Instead of putting it on a line of credit, I'll do this $100,000 piece of equipment and I'll term it out over 5 to 7 years, which makes your payments a lot easier. Okay. Talk to your borrower, talk to your lender, but these are great, great products. Obviously, you can buy equipment on it. Just keep in mind, there's a lot more documentation, a lot more stuff required, but these do exist for businesses. And obviously, every bank's different. Every bank has different dollar amounts, different credit requirements. Once again, we all sell the same product, but we all don't have the menu items. I think I'm hungry because I keep bringing up food. All right. And now we're gonna get to the fun ones. All my startups, all my ventures, all my other people, grant people, this is your section. So obviously we talked about traditional financial institutions, right? The traditional lending. But now we really got to think about, great, Jose, what else you got out there for me? There are stuff out there for you. Like I said in the beginning of the chat of the presentation, um, there's money out there for everybody, no matter where you're at in the business cycle. Okay. So first we're going to talk about SBA loans. The Small Business Administration came out with SBA lending, I think it was in the 70s or 80s, to say, how can we make banks feel more comfortable lending to people? So what they said is, great, we'll back up your loans. So there's quite a few different products when it comes to SBA. The first one is, we call it 7A. And that can be used for working capital, that can be used for real estate, that can be used for acquiring a business. And with the SBA, they're a lot more lenient than traditional financial institutions because they can work off projections, they can work off for startups. They're all going to require the exact same thing, is a business plan for for everybody, not just my startups entrepreneurs, for everybody. Does everybody have a business plan? Uh-oh, I saw a couple no's. Saw a couple people asking. April, do you have a business plan, ma'am?
I have one, but I don't actually follow it. It needs to be updated, like really good, bad.
Yep. Okay. If you're looking, thank you so much for sharing. If you're looking to get a loan, especially if you're in the startup entrepreneur, remember those tax returns that we can't see, they want to see a business plan. Carrie has one. Tina said no. Carrie may need to be updated. Rosie has one, but needs to be updated. And Freddie, not yet. Okay. All of you that said yes, no, maybe, if you're looking to get access to capital through any one of the SBA and the CDFIs, you need a business plan. Because there's no way for us to look at your tax returns and say, oh, they're doing a great job with their business. April's killing it with their business. She's just, making so much money. Here's the revenues to show it. So what do we have to rely on? Your business plan. Do you know what you're doing? Do you know your projections? And if anybody needs help with their business plan and or projections, I am here to help you guys complimentary. You don't have to be a client of Chase. We don't do all that fun stuff. I am through my own mentor pitch, if you don't mind. But we're here to help you guys. Anything you guys need, let me know. I can help you with that. SBA also has what we call an SBA Community Advantage Loan. I think it just got bumped up to 350. Obviously, when we're working with the government, things work really, really, really slow. But the Community Advantage Loan can actually be done up for 350,000, and I think it'd be done in less than 45 days. And what's that money used for? With your business plan, it'll detail it on what you need the money for and how you're going to utilize that money. But then we can also talk about if you're looking to buy equipment, they'll even throw working capital on there. So for instance, if you're looking to buy, like I'm working with this dry cleaner right now, they're going to buy a dry cleaner, but they know because they're going to have to remodel it, do a bunch of stuff. They know for the first 2 months, they're not going to be open. So we threw extra money in there that the business can live off for those 2 months. So those are programs that extend. And once again, it falls out for everybody. Doesn't matter if you've been around for 10 years, doesn't matter if you're just startup. SBA is a great program. And we can definitely talk about that a little bit longer if you guys would like to. CDFIs are community development financial institutions. These are great, great other resources. What they were created when a lot of banks have a lot of regulations when it comes to our lending. So these CDFIs, community development financial institutions, no matter where you're at, I will challenge everybody to please go to online, type where you're at, and look up CDFIs. Okay? CDFIs. and find out. Some of them can do like micro lending, 50,000 and below. There's some that can even do a line of credit for less than 50,000. There's some that can do startup venture projection based lending. If you get a contract, with the large corporation or even the government, they can do financing off those. Okay, these are great for shop. What they are, they're really a bridge loans. If your personal credit isn't the most beautiful thing out there, right? They can work with low credit scores. These are great. They're almost like a bridge loan between when you get started to when you have your tax returns to go to traditional financing. They're really great. A lot of resources. I preach these all the time, but I do challenge everybody. Type in your industry, type in CDFI, and they can do a lot of great lending. I even found one. I was in Vegas this week for a conference. I found a CDFI that does lending on sovereign land. So like reservations, they do lending on that one. Great community. If you guys have questions on it, I can definitely help you out. Venture capitalists, we all talk about venture capitalists. These are your Shark Tank people, right? I personally, this is Jose, this is not JP Morgan Chase. I'm not a huge fan of them because you're giving somebody access, they want return on your money. If that's something you want to go down the road, by means, but if you guys started a business, if you guys found your passion in something, I always tell people keep it to yourself. Don't give somebody else it because they don't have the same passion as you. They just want to get their money back, and plus they exist. Now, Paul, I'm gonna pick on you a little bit because you said you got a small business grant, which is great, and you're applying for them. Have you received a small business grant, Paul? If you don't mind me asking,
Sorry, Jose, what was the question?
have you received a small business grant? I know you said you applied for a couple grants. Have you received a grant?
No, sir, I haven't heard back yet.
Have you gone through the process?
Mm-hmm.
How was it? If you don't mind me asking.
Pretty painless. I got hooked up through ASU, their
Mhm.
entrepreneur or accelerator or program, and they pointed me in the direction of a few, and got a couple applications out now. So, knock
I
on
love
wood.
it. I love it.
Yeah.
Yeah. Yeah. Oh, I love ASU. I work with Kendall over there at the entrepreneur one. If you guys ever have an advantage, they do a great job over there. But thank you so much, Paul. So the reason I'm gonna bring up with grants is, are they available like everybody thinks? When I first came into this role and I started learning about grants, I thought grants were everywhere. I thought grants fell from the sky. People were tripping on them. Money was everywhere, right? That's not the case. When it comes to grants, I would say this is almost like the cherry on top of the sundae. It's great, but don't rely on it. There's a lot of things that go into some grants require documentation on how to utilize it, how you're going to deploy it. There are grant writers that exist out there that help you tell your story, help you do all these grant stuff. Obviously, they cost money, but they do exist. But they're just, I feel like a lot of entrepreneurs, smaller businesses feel like that money's just out there waiting for you, and that's typically not the case. And then obviously the amount of that these grants can run from, I've seen them as low as $50, $100 to 50,000, even above to 100,000. Okay. The thing is, if you guys are looking, keep your eyes out there for the grants and apply for them. They do take time, they do take effort. The money is taxable, by the way. That is taxable money. So once it hits your account, you gotta pay taxes on it. But the other thing is, keep in mind that they're not that readily available. And if you guys are interested in learning about a grant and seeing if you qualify for one, let me know because we do have a list of available grants for you guys as well that we can provide. Cool. Any questions? I know I went a little vague on all three of these, but does anybody have any questions on these? And if you do, because I want to be respectful of everybody's time, I'll be more than happy to meet with you guys after the call, do a one-on-one session, and then kind of go over if you guys are looking for anything, provide more details. But any questions as we work on this one? Let me check the chat real quick. Oh, Min asked, what is the difference between a grant and a loan? That's a great question. A grant you don't have to pay back, a loan you do. A grant is what people, especially like a lot of these organizations that get charitable donations, they say, okay, I'm going to donate money to ASU and their entrepreneur program. So ASU will set aside funds and give them to their entrepreneur program and say, find these 10 businesses, give them each $500. Here's $5,000 of this grant program. And then the business owners who receive it do not have to pay it back. Loans, you do have to pay them back. Those are funds that we give them to you, and then we add a little bit of interest to it, and then it comes right back into you have to pay me back. Then I hope that answered your question. If it did, I feel like there were more grant opportunities for nonprofits. Um, I don't know if I feel like there's more, Lisa. Lisa asked, I feel like there are more grant opportunities for nonprofits. For nonprofits, typically grants are more um there are grants for nonprofits. I don't know if I would say more. I guess that's what I'm kind of going back and forth on, Lisa. Is there more or less? There are grants for everybody. I mean, technically, a scholarship is a grant, right? So you can. There are a bunch of different ones, but there are a lot for. Well, here I'll put it this way, Lisa. I know I'm kind of going in circles. For nonprofits that get grants, that grant money is for them to deploy it to help other people. So, for instance, and a lot of times when people give grants, they'll give them directly to the business. So I'll use ASU as an example. ASU gives it to their entrepreneur, which is a nonprofit, yes. But then that nonprofit utilizes those funds and to deploy them back out to small businesses. So yes and no. I wouldn't say there's more opportunity, but I do feel like, Lisa, like JP Morgan Chase, we give grants to larger nonprofits, so then they can deploy that money on our behalf, pretty much. If that makes any sense, I hope that did. Gotcha. Perfect. Thank you, Lisa. Any other questions on this guy? Everybody's familiar with the CDFI, all the great money they have. I love it. Oh, Rosie asked, how long does a CH7 negatively impact securing a business credit? It all depends on the borrower, or excuse me, on the lender. Rosie asked, how long does the Chapter 7 bankruptcy negatively affect securing business credit? It all depends on the creditor, on the lender. Every lender has different requirements. Some are 7 years, some are less. If there's an explanation, if there's an explanation on what happened for you to create that, I'll give you guys an example. I had a dentist that I worked with that had to file Chapter 7, and then 5 years, 6 years later, he came to apply for a loan. It was very difficult because of the Chapter 7. One thing we asked him was like, "Well, what happened? Because you were, you know, bleeding teeth left and right, and then all of a sudden it just went down." Well, it turns out that he had a form of medical leave. He had cancer. So for those 2 years, he had to, because he wasn't working. So breadwinner of the family, all this fun stuff. Obviously, that's a terrible thing to have to go through, but it's understandable. He did not just quit. He did not do, it's something out of his control. So, Rosie, going back to your question, I know that was a long-winded answer. Depends on the borrower, talk to them, but have a conversation. Do not lie to them, because we will find out. We check your credit, we check everything for you. I can't tell you how many times people have said, no, I got a perfect credit score. And then I pull the credit score and they have a bankruptcy. Now I'm like, I don't trust you. You're a liar. I don't want to give you money, because if you're lying to me about this, what else are we lying about? We're gonna find it. Just be honest, guys, because then we can have a conversation, and then I can go to bat for you a little bit better. Carrie asked, does this apply for government grants? And what question, Carrie, if you don't mind me asking, if you can just expand on that. Does what apply for government grants? And you're probably typing, so I'm gonna give you a quick second. Is everybody from Arizona? Does the government grants apply? Are they the same as the grants you mentioned? Oh, perfect. Okay, cool. We have a lot of people from Arizona. I love it. Oh, Superior. Nice. Thank you, guys. Okay, going back to Carrie's question. Does government grants apply? Are they the same as grants you mentioned? Yes. So the government grants do apply. Oh, Rosie and Chandler. Um, Oh, everybody is Arizona. Great. Love hearing that. Sorry, guys. Yes, government grants are exactly the same way. Those do apply, but government grants are more like contracts. They do contract grants. Those do apply out there. There's a lot of government contracts too, and I'm from Arizona. Perfect. Yeah, government contracts, they do exist. I mean, they're out there as well. They have a lot more rigorous process because they really want to see your background. They really want to see a bunch of fun stuff. One of the things that I would recommend is, after we're done here, you guys can go to, I can show you guys a couple websites that you guys can go to and see what grants are available under the government. But one of the things that I would first will say is not the easiest, the quickest way to get on, like if you're looking for a government contract, is to become certified as your business. If you're our veterans, there's a veteran set. If anybody's here, the veteran, number one, first of all, thank you for your service. But number two, there are grants. There are grants out there that money's been set aside for like veteran-owned businesses that they're really trying to focus and push that, and different other organizations as well, minority women, all that fun stuff. We can definitely talk about those on a one-on-one. I know we're coming up on time, so I want to be respectful of everybody's time. Omar asked me, do you have to be business to business for government grants? No. It doesn't. You can be business to consumer as well. There's a bunch of different ones, and like I said, I know I'm being very vague, but because there's so many out there and so many requirements, but no, you don't have to be business to business. I am approved to contract, but the bid processing is overwhelming. Yes, it is, Rosie, and there's people that can help you. There's organizations that can help you with that. And if you want a little bit more information, I'll be happy to meet with you and kind of get that to you. All right, guys, we're gonna get going just because, like I said, I want to be respectful of your time. Coming to the last part, building your own empire. So now that we talked about the credit options, your personal credit, we found out, you know what, Jose, I don't need 100,000, I need 96,000. We found out that you're gonna buy a building too, and you guys are all gazillionaires, and you're gonna make my quota for the year, right? I really want everybody to think about this, and as we start, and I hope you guys feel a little bit more comfortable and say, you know what, Jose, I know my credit option, I know what's available. And I hope you guys feel a little bit more confident on that when we leave. And like I said, just because this presentation is coming to an end doesn't mean I'm done here for you guys. I'm really here to help you if you guys have any questions, anything I miss. The one thing I will ask for those who are not on your cell phone, we have this QR code. This QR code lets us get information, just like we tell all business owners, go on there, get feedback from people. If you guys don't mind just scanning this QR code for me, the city is Phoenix, and like I said, my name is Jose. Just scan it and tell us what you guys think about this presentation, because we want to make sure, just like Seed Spot does, we want to make sure we're bringing the right content to you. If you're out there, you know what, Jose spoke too much about food and not enough about credit. Make sure you guys put that in there for me, right? We want to make sure you guys have it. If you don't mind scanning that QR code for me, like I said, the city is Phoenix. My name is Jose. We want to make sure we're bringing the right information to everybody. With that being said, we are all set. Are there any questions? I don't know. Can you help me how much time we have left, or should I just stop it?
We still got 5 minutes left, so you can use your 5 minutes as needed.
Perfect.
I am obviously eating lunch, so I apologize. It's 4 o'clock where I'm at. I'm not in Arizona, so I'm eating a late lunch, guys. I apologize in advance if you see me munching. Yeah.
No worries. Do you mind if I put my contact information in the chat box?
Nope. Go ahead, Jose. If you feel comfortable, please feel free.
Yeah, sure.
We are hoping that Jose can offer mentorship sessions. I'll follow up with him, but if at the same time,
Yeah.
altogether, just letting you guys know that your mentorship credit, while you can talk to Jose until he's officially on our scheduling app, which can happen because mentorship happens for the next 2 weeks or so. So we'll put him on there. If you have a conversation with him while he's not on there, unfortunately, you will not receive the credit. So I would wait if you look.
No.
But if you just want to chat with him, feel free.
Yes. Absolutely. If I'm not on there for any reason, can you send me the information and
I will.
make
Yeah.
sure I get it done. Yeah, I want to make sure everybody gets credit.
Yep, I'll send you information and just make sure you're on the. I think what we're missing right now is just your availability. We hadn't plugged that down, so once I get that, and we can put you on there. Yeah.
Okay, cool. Actually, if you want to stay on after this call, we can kind of go through that if you don't mind.
Yeah, sounds good.
Perfect.
Yep.
Perfect. And Carrie, thank you so much for filling the survey, guys. Like I said, I hope you guys liked it. It's part of our thing that we're really trying to focus and make sure we get the right information to you guys. But you guys have been nothing but wonderful. Thank you so much for your participation. I know some of you are hungry now because of my conversation, so I apologize. I know I'm gonna go get something. I'm feeling it. But thank you guys so much. I applaud each and one of you, and I truly mean it when I say I applaud each and one of you for taking the time out of your life, your family, everything that you love to really, get this information and work on your business rather than working in your business all the time. If there's anything we can help you with, please let us know. My contact information is in the chat for you guys. Thank you so much, and I hope everybody has a great afternoon.
Thank you.
Thank you so much, Jose. I will stop recording now.